In this segment of the Medicare Made Simple topic, we're going to discuss Medicare Part B, the other half of Original Medicare. You can watch our video on Part A and other Medicare topics on our website. Medicare Part B covers a wide range of services, everything from visiting the doctor to taking a ride in the ambulance. Let me share my screen with you. First, we're going to look at what Medicare Part B is and what it covers. Then we'll cover the base monthly premium and what could cause you to pay more. Then we will look at how and when to enroll in Part B so you can avoid any future penalties. And finally, we will cover those penalties so you can really avoid them. Well, my name is John DeShaw, and I'm a financial advisor with Solera Asset Managers and Insurance Agency. And we're located in Roseville, California, and we're proudly a local independent financial services office. I've completed the American Healthcare Insurance Professional Certification, and I'm certified to offer both Medicare Advantage and Medicare Supplement plans by private insurance companies. I'm licensed and contracted with most of the major carriers of Medicare plans in California and in several other states. But first, for compliance purposes, I must inform you that this course is not affiliated with, nor is it endorsed by any government agency or the federal Medicare program. It's purely for educational purposes, and there will be no offer to buy or sell any products. Now, each situation for you is unique, and you should consult with a licensed agent before making any decisions. Well, let's explain what Medicare Part B is and exactly what it covers and what it doesn't cover. Medicare Part B is your medical insurance. This is the part of the Medicare that covers your doctor services both in and out of the hospital. Part B helps pay for doctor services and outpatient care. Think of this primarily as helping with the cost of your medical care outside the hospital. Now, why do I say helps pay? It doesn't cover outpatient care, as you might see in many advertisements. Part B is coinsurance. You will have your share to pay. You cannot be denied Part B coverage. This chart shows some examples of what Part B helps to pay for, including things like doctor visits, lab tests, blood tests, x-rays, physical therapy, and other services outside of the hospital. And by the way, the annual wellness visit is an opportunity to meet with your doctor to discuss your healthcare status and goals. It is covered 100% with no copay, but this is not a physical. It's a verbal discussion with your doctor. The final item I want to point out here is that if you have a medication that is administered in a doctor's office or in the hospital, it will be covered under your Part B benefit and not under Part D. This means you will have a coinsurance for it. In other words, a percentage that you'll pay and not a copay. Okay, well, we've gone over Original Medicare Part B, what it helps to pay. Now let's look at briefly what Part A and Part B do not cover. Many people are surprised to hear that they've got out-of-pocket costs with traditional Medicare, which could be significant depending on your individual healthcare needs. Further, there is no out-of-pocket maximum, no financial limit or protection with Original Medicare Parts A and B. A serious illness or injury could create real financial stress. Another possible surprise is that Medicare in its original form does not cover prescription drugs, which can be a significant expense as we get older. Other non-covered services include routine physicals, dental, vision, hearing care, as well as any corrective treatments. Glasses, contact lenses, hearing aids are not included. Long-term care, such as a nursing home, is never covered under traditional Medicare. Custodial care, which includes bathing, eating, dressing, also known as the activities of daily living or ADLs, are not covered. Care outside the U.S., except in very limited circumstances, is not covered. And this is where Medicare Supplement or Medicare Advantage or a Part D drug plan come in as additional help. Now let's look at how much Part B costs you and how it could cost some people even more. Unlike Part A, Part B is not free. Most people pay a monthly premium for Part B. For 2021, the premium is $148.50 per month. It'll be going up by a small amount for 2022. However, if you're considered a high wage earner, you will pay more. Your monthly premium is based off your reported income from 2 years ago. So for 2021, it's based off your 2019 modified adjusted gross income. To qualify for a base rate, your income must be $88,000 or less if you're single, or less than $176,000 if you're married. Here is your rate table. If your modified adjusted gross income for 2019 is above the minimum, your premium will be higher in 2021. You can see each of the brackets here. If you fall into one of these higher premium brackets, talk with us on how to create a plan to maximize your Medicare benefits. One other item I'd like to point out, and it's missed by almost all of our clients. I'll explain this with a story. If your retirement income is $150,000 per year and one spouse died, I know it's terrible and no one wants to really talk about it, but let's just take a look at what happens to your Part B income as the surviving spouse. The $150,000 for a married couple puts you at the base premium rate of $148.50. But as soon as one spouse dies, and if the surviving spouse's income is still that same $150,000, that puts you in the fourth tier of rates. Your $150,000 income just increased your monthly premium to Part B from $148.50 per month to $386.10. That's more than 2.5 times increase in your Part B premium. It's considered a hidden retirement tax that many people haven't considered. On another note, you can appeal your premium if your income is significantly lower now than it was 2 years ago. For instance, you just retired and are now living off significantly less income than you were while you were working. Well, there is a standardized form for this. The IRMAA appeals form stands for Income Related Monthly Adjustment Amount. You can find that form on the Social Security website, or you can just do a Google search for it. Now, you are required to have Part B if you are 65 and don't have health coverage through a current employer or a spouse's health plan. Most people have the monthly premium deducted from their monthly Social Security retirement income, but you can pay for it as well. If you decide to pay for it, you will be billed on a quarterly basis. You can make this choice when you sign up for Part B, but don't worry, you can always change your mind later. The 2021 annual deductible is $203. Now, this means that you are responsible for the first $203 of your care costs. After the deductible is met, you're responsible for 20% of the cost, while Medicare pays the other 80%, a coinsurance for the Medicare approved amount for most Part B services. You are responsible for excess charges if there are any. An excess charge is an amount over the Medicare approved amount that a provider has charged for a service. This happens when a Medicare provider does not accept Medicare assignment. Medicare assignment is the amount Medicare has decided a given service should cost. To find out if your provider accepts Medicare assignment, just ask them. Now, note in red at the bottom, like Part A, there is no annual out-of-pocket maximum, no limit to your financial risk. This is where Medicare supplement plans come in to fill in the holes in original Medicare, or a Medicare Advantage plan comes in to replace original Medicare, so you don't have that exposure to risk. Now, before we dive into how to enroll in Part B, we first need to understand that you do not have to enroll in Part B when you turn 65 if you or your spouse is still working and has coverage through an employer's plan. Unless your employer has 20 or less employees, then you will have to enroll in Part B when you turn 65. One more point to mention for those who live in California. If you have your insurance through Covered California when you turn 65, Covered California is supposed to drop you from their plan and direct you to Medicare instead. But we've seen a few instances lately where that is not happening. You're not being informed. Medicare looks at this as your responsibility and not Covered California's. So if you do not catch this before your initial enrollment period expires, you will be subject to fines when you do finally enroll in Medicare Part B. Most people will want to enroll in Part B as soon as they are first eligible at age 65. This is called your initial enrollment period, or IEP. This is a 7-month window that begins 3 months before your birthday month and ends 3 months after your birthday month. This applies to everyone except those of you who were born on the first of the month. In this case, everything is pushed forward 1 month. So for example, if you were born April 1st, your IEP would start 4 months before your birthday month, December, and Medicare begins on March 1st. If you're still working at age 65 and you have health insurance through your employer, you may want to delay enrolling in Part B until you retire. When you do retire, you will have an 8-month window after the month of your spouse's employment ending to enroll in Part B. Now, here is where it gets a little crazy. Even though you have 8 months to enroll in Part B, you only have 2 months to enroll in a Medicare Advantage plan or a Part D drug plan. But you have 6 months from the date that you enroll in Part B to enroll in a Medicare supplement plan. Makes perfect sense, right? I know it's confusing. I'll go over it a second time. When you retire, you have an 8-month window after the month your employment ends to enroll in Part B. Even though you have 8 months to enroll in Part B, you only have 2 months to enroll in a Medicare Advantage plan or a Part D drug plan. But you have 6 months from the date you enroll in Part B to enroll in a Medicare supplement plan if you chose to go that route. It makes more sense the second time. If you're already collecting Social Security benefits, when you turn 65, you will automatically be enrolled in Part B. If you are still working, have health insurance through your employer, but already are collecting Social Security, you will have to contact Social Security and tell them that you do not want Part B to go active when you turn 65. Now, if you forget to tell them that you don't want Part B and you remember at a later date, you will not be refunded the Part B premiums that you've already paid for, even though you didn't need to. Otherwise, you will need to enroll once you are eligible or as soon as you retire. The easiest way to apply is to go to ssa.gov/Medicare to enroll online. You can call or go into a local office, but the easiest way is to do it online. Here is that website again. Now, when you do log onto the site, it will look like this. Select Medicare enrollment at the bottom right-hand corner. Scroll down until you reach the How to Apply button, then select the blue button that says Apply for Medicare Only. Review and check the I understand after you've read the document, and then click Next. Now, at this point, if you don't already have a My Social Security account, you will need to go back to the home page and open up a My Social Security account. If you sign up for Medicare Part B before you turn 65, your coverage will start on the first day of your birthday month. If you sign up the month of your birthday or later, your coverage will not begin until the first of the month following when you enrolled. But if you enroll during January 1st to March 31st, the general enrollment period, your coverage will not be starting until July 1st of that year. And everyone's favorite part, penalties. Well, the best way to avoid penalties is to know your enrollment dates and to enroll on time. The following penalty will apply if you're late in enrolling, unless you qualify for a special enrollment period or SEP or another exception. You will pay an additional 10% of the penalty amount for each 12-month period that enrollment was delayed. Now, the penalty is charged every month for as long as you have Part B. Well, let's take a look at an example of how that penalty would work. Your initial enrollment period ended December 2019, let's say. You waited to sign up for Part B until March of 2022 during the general enrollment period. Your coverage starts July 1st of 2022. Your Part B premium penalty is 20% of the standard premium. And you'll have to pay this penalty for as long as you have Part B, even though you weren't covered for the full 27 months. This included only 2 full month periods, 2 12-month periods. Well, here it is. Here's how it calculates. From December 2019 to December of 2020, that's 1 year at 10% penalty. January 2021 to December 2021 is 1 year. That's an additional 10% penalty. January 2022 to March of 2022. Now that's less than a full year, so it's not penalized. So the total penalty is 20%. Part B premium is $148.50. The penalty is $148.50 times 20%, which is $29.70 per month. So the new Part B premium is $148.50 plus the penalty of $29.70. That's an adjusted monthly premium of $178.20 for the rest of your life. So avoid Part B penalties by letting us help you understand the enrollment penalties, rules, and how to avoid them. Well, thanks for watching our video on Medicare Part B. I hope you found it informative. You can check out our other videos to get more detailed information on the other topics of the Medicare puzzle. If you have questions or would like to schedule a virtual chat with us, here's our contact information. We are an independent insurance broker specialist in Medicare. Our service is 100% always free to you, and we would love to help you with this confusing process. We've helped many people just like you, and we'd love to have you be our next client. Give us a call.